Good morning and welcome to our advanced session on Naga Warrants by Kenanga. My name is Isabella Zen, the Structured Warrants issuer at Kenanga, and we're going to be focusing on two parts today, which is the live matrix, a bit more on the red highlights, what to do if the price is different on the market and on the matrix, and the M.E.S.T.I strategy elaborated. Let's get to it. Earlier when Ryan L said, the delta is increasing at the money, in the money. How come, Isabel? Your M.E.S.T.I strategy, it doesn't cover exercise ratio, it doesn't cover exercise price, it doesn't talk about delta, it doesn't talk about gamma, theta, vega. I want to cover that in this section right now because M.E.S.T.I strategy actually does cover all of these things. Second thing I'm going to cover is the live matrix, the red highlights, what it really means, low inventory, the increased offer, what it really means. And red highlight, I'm actually going to tell you how you can actually trade or buy a warrant, even if it's red. So if you're a beginner, close your ears because this section is not for you. And the third part I'm going to cover is why is the price different from the market. At the end, we're going to have a Q&A where we're giving away 5 more Starbucks cards, and they are very difficult, and you'll need a calculator. So get a calculator ready. Useful links, I always mention M.E.S.T.I strategy warrant scanner tool. The M.E.S.T.I strategy which you use on the warrant scanner tool is on nagawarrants.com. The last defense strategy which you use on the live matrix is on nagawarrants.com. The educational videos where you get to watch my pretty face out of all of those videos we recorded last year very hardworkingly is on nagawarrants.com. Instead of listening to rumors and WhatsApp messages, primary source for new listings, expiry, and corporate adjustments are on Bursa Malaysia's website. Telegram, our public chat is Naga Warrants by Kenanga. And if you want to message us one-on-one, it is Naga Warrants team over here. So there are 2 different chats, 2 different pages on Telegram. And of course, our webinar recordings and those beginner and advanced videos, they're all on Kenanga channel. We'll be posting this video up in about 1 to 2 weeks, so do be patient with this. YouTube highlights, it shows all of these things which I mentioned earlier in greater detail, and I speak very slowly in there. Well, not very slowly. I don't think I speak very slowly, but it is all in there as well. So today, in this advanced session, we are going to be covering 3 brand new questions which I've added in. What does low inventory really mean? Why do warrants change ticks? Why is the live matrix different from the market, etc.? So right now, let's jump straight to it. The M.E.S.T.I strategy elaborated. Jang, jang, jang. So if you were here for my first session, which was 5 minutes ago, you would know that the M.E.S.T.I strategy comprises of 5 parts, right? M.E.S.T.I. M stands for live matrix. Make sure there is a live matrix so you can refer to the price. There are 3 other issuers that don't have a live matrix at the moment, so you're kind of guessing in the dark. I'm not too sure how you guys trade that, but it's up to you. Effective gearing, you have to make sure that it's high effective gearing. So when effective gearing is high, it means that if top glove effective gearing C74s is 184, top glove underlying moves up 1%, the warrant will move up 1.84%. Moves down 1%, the warrant will move down 1.84%. Third thing is sensitivity. Earlier I mentioned how you use a warrant sensitivity. So let's say you've got something which is very insensitive. For example, Bumi Armada. If you actually monitored it over the past few months or years like me, you realize that most of the time it only trades about 2-3 cents a day if you're lucky. So if it has 2 to 3 cents levels, you kind of want to choose a 1 to 2 tick warrant so you can actually flip sufficiently. Let's say the underlying that you chose, say Bumi Armada, you know that it only flips 2 cents a day, right? Well, in decimal 2 levels because Bumi Armada is below $1. But let's say Bumi Armada, it flips from say 80 cents to 80.5 cents to 90 cents. That's all it ranges from every single day. Okay, 3 levels. It'll be quite ridiculous to choose a warrant which has 7 ticks, 10 ticks, or 20 ticks because it'll take so long for it to flip. It'll be the same price for those 7 cents. But let's say if you choose something like Supermax or the rubber gloves, which are very volatile, or even something like DNO, which can be very volatile as well. Let's say DNO, one day, the underlying can move 10 cents, 20 cents. If you choose a warrant, which is 1 tick, 2 ticks, it is very volatile, it's very quick. You might not even be able to cut loss in time or take profit in time. So you want to choose something which is reasonable, like 3 ticks, 4 ticks, 5 ticks. That's very reasonable as well. Why do I say you can choose a very high tick warrant? Because when a warrant has very high effective gearing, the sensitivity is also very bad. An example is, let's say you buy a warrant which is half tick, right? Half tick. What's half tick even mean? Half a cent. Let's say you buy a warrant which is half cent. So a lot of people like to buy warrants which are half cents because when they flip one time, half cent flips to 1 cent. That is already, you guys try to answer. How many percent is that? Half cent warrants, if you buy it on ask, it flips so that it is 0 to half cent, and the next level is half cent to 1 cent, and then you can actually sell on the 1 cent after that. Half cent to 1 cent, what is the ROI? Put in the chat. I shall wait patiently. Wong Man Ching, correct, 100%. So earlier I mentioned that you only want 30%, but a lot of people, they want something sexy like 100% because it sounds like a lottery, right? The problem is when a warrant is very insensitive, then it might have something like 50 ticks, 100 ticks. So you may not even be able to exit. You might have bought the warrants at half cent and you can't even break even because the underlying say it moves 20 cents. But the warrants flipping the range, the ticks is 50 tick warrants. The cheaper the warrant's price is, the more ticks it's going to have. All right? Why? I'm going to cover that next. And of course, time to expiry and issuer. So, firstly, before we get into the step 2 of the M.E.S.T.I strategy, let's cover the step 1. Since you guys are advanced, we can go into a bit more detail. Let's say AirAsia, you want to choose the right underlying, right? Somebody is asking, could you explain this warrant grade tech CH effective gearing 2.19 and 18 ticks? We can look after this. What happens, we can use as a case study, the great tech one for Kaylee Chua. Por Yin Wong, what happens if the warrant flips below 0.5 to 0? 0. So that means you either you sell it to the bid and there's nobody there because issuer is not there anymore. It is worth 0 on the bid, 0 half cent on the ask. If there's nobody queuing, because the issuer won't queue there anymore, it's worth 0. If there's somebody else queuing, you can sell to them and hopefully break even. But if there's nobody there, there's nobody there. The warrant won't get delisted. It'll just be alive until the dying day. The reason is because, say the strike price is 5 ringgit and the underlying has dropped so much all the way down to, the matrix has gone lower and lower and lower, all the way down to say the underlying is now 50 cents. The warrants will go from 20 cents to 15 cents to 10 cents to 5 cents to 0 cents, and below $1 it is all worth 0. So you need to look at M from the life matrix, the M.E.S.T.I, right? Case study, AirAsia. Let's say you've bought it at 1st February. You notice that the trading rule is price cuts above 20-day moving average, which is the pink color thing I wrote over there. So MA20, you can look at these slides later. I realized that not a lot of you, I can't put this way. One of the biggest mistakes is that people have really bad technical analysis. based on the charts we've received. So this is just an idea of how you can actually create your own trading rules if you're an advanced trader. So for say if you're interested in AirAsia, you kind of want to have a trading rule for that. Let's say my rule for AirAsia is when this thing means price cuts above. Say the pink color moving average is like this, and the price cuts above that way. Okay, price cuts above. And the 20-day moving average is above the 50-day moving average. That kind of idea. So my rule for AirAsia was like that. So I see that happening once here. Got it? And my sell signal was the opposite. My sell signal, for example, can be when price cuts down the 20-day moving average. So what this means is the moving average is like this. That's a terrible moving average, by the way. Moving average doesn't look like that. But let's say the moving average is more like terrible drawing. It's like this. And the price cuts downwards. So that is my sell signal. And this will be my buy signal. So every time this happens, I know it's a buy signal. Every time this happens, it's a sell signal. So every time price cuts this way, buy. Every time the price cuts below the 20-day moving average, I sell. And then this whole duration, what do? Absolutely nothing. I just come to the office, open up my trading platform, and I drink coffee, read the newspaper, put on my makeup. That is all I do. Because what I'm waiting for is for the price to cut above the green and the pink there as well. So let's say price cuts over there. My sell signal was again here. Buy sell here. The return was very little, just 14%. The first one was 26%. The next one was 14%. And then this whole time, I am just patiently waiting, doing jack. So I wait again, wait for the price to cut above, following my same trading rule. Over here, AirAsia is 70 cents. And then when it comes over here, selling when the price cuts downwards, returns 28%. So the duration of this trades, this very lazy way of trading, and this is just trading the underlying, is February 1st, 3rd March, 16 July, 9 August, 2nd June 2020, 12 June 2020. Very lazy trading. But you see, the returns is only 26, 14, 28%. Not very sexy. If I want to make it sexier, I consider the structured warrants. For example, if I just take the same trade from here to here, the lowest trade, which was the 28% return, over here, was 28% return if I bought the underlying. If I bought the corresponding warrants, 10 cents to 14 cents, I would have made 40%. So it's up to you whether you want to go for the 28% or the 40%. It is still the same amount of time, the same amount of effort, the same amount of waiting. Muhammad Ridwan Zulkifli is asking, what candle time frame for your trading rules? Different underlyings, like I said, they are like different children. So all of them have different trading rules. But what I like to do for a candlestick chart is I would pull it all the way back. Yes, Murali Raja, this is on a daily time frame. These are one-day candlesticks. So what I do is I pull it back all the way, the charts to the listing if possible. If it pulls back to 10 years, 15 years, I'll pull it back all the way. And one-day candlesticks. And then I would want to get a very, very far perspective on the long-term supports, long-term resistance, and sometimes you can even draw a long-term Fibonacci from the bottom to the top. and then see the retracement prices. After that, I would always zoom in a bit more into finding out what it has characteristically done over the past few years. So I will try and look for buy and sell signals that I can kind of back test. Say, does this strategy, does it follow the moving averages in 2016, 2017, 2018? No. Does it follow EMA or SMA or Bollinger Bands, or what does it follow over the past few years? Even say in 2000, 2002, 2003. What can I back test? And I try and do some buy and sell signals to see whether it is accurate or not. So of course, it can always change its behavior over time. Just like your kids become teenagers, right? But you kind of know its behavior once you do this homework. So at the end of the day, you are just waiting for the trading rule once you write it out. And then you are just waiting over the years for this stock to come into play when the sector rotation comes in. So what I was showing over here is the same thing. Let's say if I just bought here and sold over here, same rule comes in all the way in June 2020. Oh, sorry. When I circled that earlier, I was wrong. What this date was, this is February 18, 2020. This one is over here. But same thing applies. When price cuts above the pink color line and the green color line, and you sell, same thing. You just kind of repeat the same strategy over and over again when price cuts above, etc. Repeat and repeat and repeat. Next case study, Gen M, Genting Malaysia in 2021. So what I did was I pulled it all the way back just now to answer Muhammad Ridwan's question and Murali's question. You can see over here it's 2021. This is a one-day candlestick chart all the way to 2012. Yes, I really pull it all the way that far. What I did was I just did a long-term Fibonacci from the top to the bottom. And I realized that at that time in 2015, it likes to do, whenever it touches 3 ringgit, which is coincidentally the 61.8 Fibonacci retracement, approximately, people like round numbers, you know. It's a psychological thing. But say all I did was here, sell at the 50% Fibonacci, buy here, sell here, same thing. That is 13% twice. My next rule for Gen M was also when the price cuts above the 200-day moving average, was the line in yellow. And the 20-day cuts above the 200-day, which means this is the line. The pink color moving average cuts above. Moving averages are very smooth, okay, just my drawing. And my target price, because I know it's volatile, I put it as a trailing 1 bar stop loss or take profit. Then from here to here, this is 2017. Sorry, my chart's covered a bit. Same thing. I follow the same rule again in 2020. 30th November 2020 to 31st December 2020. The underlying just moved from 250 to 270. This is over here. All I did was pick up a warrant instead, 11.5 cents, so that 14 cents, that's 22%. Brainless trading. You just follow the rule that you've already identified. Same thing works for hibiscus, and of course I do my homework. These are all details that I wrote on my own. Fourth quarter, net profit up how much, acquired this company, what happens with the EMA, you know, all these things, you just kind of do your homework. Same thing as well for hibiscus. Back in the day, it likes to follow this price, where all you would do is buy below $1, sell at 1, buy at 1, below about 96 half, sell at 110. Same thing again. you just wash, dry, rinse, repeat. Wash, dry, rinse, repeat. Trading to me is emotionless. I don't really feel much greed or fear, unfortunately or fortunately, when I do this. I just follow my rule, enjoy it when I'm right, try to fix it when I'm wrong. Coincidentally, we have another trader over here. So, dude, who's coming to do some testing, by the way. Do you feel greed or fear when you trade anymore, or are you just an emotionless robot like me?
Mostly emotionless.
Do you hear that? Mostly emotionless. We get excited when we are right. We're happy when we're right, but we follow the trading rule, right? We're not like euphoric, which is what you don't want to be. Excited for what? You're just sticking to the plan. You're just making money, trying to hit your trading goals. So, once we already have the trading plan in place, which is step 1, choose a great underlying share. Like I showed you, you must have your trading rules. The second step was to choose a great structured warrant using the M.E.S.T.I strategy. Let's elaborate a bit more. So earlier we mentioned that live matrix over here, no problem. Everybody knows how to use the live matrix because you're an advanced team of people. Effective gearing. So earlier, a few of you did mention, how about delta? How about at the money, in the money, out of the money? How does this affect? Why don't you talk about it, Isabel? How come your M.E.S.T.I strategy is effective gearing? It doesn't cover all of this. It's because the formula for effective gearing is gearing times delta. So everything is already included in there, whether the warrant is in the money, at the money, out of the money. It's all included into this beautiful formula. And gearing, of course, if you want it, is underlying price divided by warrant price and conversion ratio. So everything is kind of packaged into the M.E.S.T.I strategy, which is effective gearing, including delta, including whether your warrants is approaching the exercise price or not. So all of them is packaged because we times delta, times gearing to get the effective gearing. Sensitivity as well. A lot of individuals, they ask different things about sensitivity. For example, does the volatility affect the sensitivity? Does effective gearing affect sensitivity? A lot of these very confusing questions. Does gearing affect sensitivity? Does effective gearing affect sensitivity? Break it down. What are the components of sensitivity? Sensitivity, this formula, they're all on our website, but apparently a lot of people don't read them. Sensitivity in cents is the warrant tick size divided by delta per warrant times the underlying tick size. So for example, if the warrant tick size is 0.05 divided by delta per warrant, which you can see on our website, times 0.01, delta per warrant is delta times ratio, then you will know the components of sensitivity. Muhammad Radwan Hamid, why exercise price is not considered? It's not that I don't consider it. It's just that if you use the M.E.S.T.I strategy, E already counts for effective gearing. So it is already compartmentalized. It's already packaged into it. Because delta, it goes from 0 to 5. 0 to 1. What am I saying? 0 to 5. So a warrant, which is, let's use this next slide, which I've prepared to answer your question, Mohammed Redwan Hamid. So, a bit more detail is here. Okay. So earlier we mentioned M.E.S.T.I, which is effective gearing, sensitivity, and time, which is these 3 charts. So in a warrant, we're looking at exercise price. That means it is at the money. If, say, a particular stock is 2 ringgit and the exercise price is also 2 ringgit, it is at the money, which is E here. The exercise price. It is at the money. So, whenever we count the M.E.S.T.I strategy, which is the effective gearing, balanced with high sensitivity, that means it's very few ticks. You want to choose a warrant. Whenever you use a warrant scanner to look at the M.E.S.T.I strategy, M, you've got the matrix, E is effective gearing. That means you sort the warrants using the warrant scanner. You sort from high effective gearing to lowest effective gearing. So what that does is that you kind of choose all of the warrants over here first. You kind of see which is the highest effective gearing. right? Deep out of the money warrants, like I mentioned in my earlier example where I talk about half-cent warrants, they are very high effective gearing. One time it flips, it can be 100% return. But, warrants that are over here on this side, very deep out of the money, are very cheap. Warrants on the deep in the money side is very expensive. So when you go from the left to the right, deep out of the money to at the money, which is the exercise price, to deep in the money, it goes from cheaper to expensive. So that's why people always want the cheap warrants, the 0.05 ones, right? The half-cent warrants. But when a warrant has very high effective gearing, you notice that its sensitivity is very high. That means there's many ticks. To elaborate, the matrix on this side will look like this. It will possibly be gray here, and here is all the, I can't really scan white, but see it'll be white. So it could be something like 50 ticks for it to flip. YJ Ng, your expensive means higher in terms of warrant price, correct? Yes. I mean an expensive price warrant. For example, the warrant over here on the deep out of the money side could be maybe 1 cent. And over here, very expensive. Let's say it can be 5 ringgit warrants. Totally possible. All right. So back to sensitivity and how to balance it out. The first thing you need to remember, it's the next part. So when it goes to very deep in the money, the warrant on this side, a quick recap if you guys forgot what is deep in the money and deep out of the money. Let's say strike price, exercise price, same thing is $2. When it's deep out of the money, that means the underlying price is maybe, let's say, 50 cents. If the underlying price is $2 as well, following the underlying strike price, at the money. If it's say $2.50, $3, it is in the money, the strike price will always stay the same. All right, so out of the money, at the money, in the money. So when it's very deep in the money, the sensitivity does increase. So the matrix may look something like this. Gray, white, very tight gray whites, maybe 1 tick, 2 ticks, 1 tick, 2 ticks, and here is something like 50 ticks, 100 ticks. So to balance out high effective gearing, what you really want is, so we want this zone, we want high effective gearing, but we also want low ticks, right? We want few ticks so it flips very fast. So we kind of balance out using the E and S parts. And we kind of balance out, and usually the warrants, which can suit you, but it really depends on your preference, it can be approaching at the money. So that means it is already packaged inside the effective gearing and sensitivity part. Casey Wong, how to calculate time decay of a warrant? Usually I'll hold for a few weeks. I'll answer that. Ryan L, is it permissible for the warrant issuer to unwind their position, sell the underlying when the warrant is in the money? I think you have to understand that banks, we are very tightly regulated. So the question that, let me finish this part and I'll answer Casey Wong and Ryan. Okay, finally, this part, it is the days to maturity. The expiry, let's say 1 month before. The time value decay falls down significantly. That's why I always say avoid the last 1 month. If say the warrant is 1 year, 11 months, not so much time value decay. So Ryan L, to answer your question, everything is under the M.E.S.T.I. So E.S.T, so he's asking about T. How do I find out what is the time value decay for my warrant? It is there. It's under the theta column. Ryan, which stock do you want? Okay, let's look at, say, just now somebody was asking about Great Tech. Oh, I'll just choose the first one, okay? Faster for all of us. Since time is of the essence and the Q&A is very hard. GHL. Oh, it's only one GHL by Kenanga. Okay, no, bad example. I want something with lots of warrants. Okay. Theta. So what you want to do, 10:53 a.m., thank you. So what you want to do, Casey Wong, is you press the theta over here on the warrant scanner, this page over here on nagawarrants.com. You press the theta, they calculate it in ringgits. You press search, and you can see for all of the warrants in the market, the first thing you do is you sort by effective gearing. You press that. You see from 5.88 to 3.59, I sort it first. I press this little gray arrow on top. So 5.88 to 3.59 to 325, da 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 da. Sensitivity, 13 days. I do the E, I do the S, then I do the T. And I want to know, wow, what's the time value decay, right? What's the theta? I would notice that warrants are expiring, or reaching expiry. For example, this GDEX CV, the top one over here, 13 days to expiry, expiring 11th June. There's even an expiry clock over there showing you that it's approaching expiry. And the theta is very high. That means every single day, even on weekends when you hold this warrant, it decreases in value by 0.006 ringgit. Compared to the others, which is 0.002, 0.0003, 0.002. There are sometimes that warrants can actually have a long term to expiry for Casey Wong's question, and the time value decay can be very high and can erode your position. So if you're holding for a few weeks, you kind of want to pay attention to this theta column on the warrant scanner. Ryan L, is it permissible for warrant issuers to unwind their position, sell the underlying when the warrant is in the money? So I think you kind of misunderstand the concept of hedging, Ryan. So when a warrant issuer actually has trades on the warrant, I actually do have a slide prepared for that question, but I wasn't going to cover it today. Let me hunt for it really quick. So Ryan L's question is actually, how do you hedge a position? So for an issuer, let's say somebody wants to buy MRCB C39. They buy a position over here, they buy say 10 cents. The issuer will pick up some MRCB at 70.5, maybe a small proportion, not exactly. It's called delta hedging. And so when you actually unload the share, for example, Ryan, you took profit because MRCB went from 70.5 cents all the way to say 72.5, and you unloaded your position of the warrants. The issuer will then only unload their position of the underlying. That's hedging. We're both on the same side of the trade. You win, we win. And when they're saying it's permissible, we will never have a naked position. That's not allowed. You can read our base prospectus and our term sheets. We are obligated to hedge your position. It's not a gambling game. Muhammad Redwan Hamid, if warrant in the money, should I leave until expired, like the recent TM warrant case this week? I would always say take profit before the expiry. That's just my personal view. Because if you actually wait until the expiry date, you're not actually following your target price. You're just kind of wishing and hoping. And what if the entire 10 months you've been holding TM, it was performing very well. But coincidentally, on the 1st of June, it's lockdown date, entire market drops down 20 points. And this TM stock of yours, it drops down 30 cents in those last 5 days. So upon expiry, the issuer actually calculates a volume-weighted average price, which is, coincidentally, I was also going to share today. Oh, I can't scroll to that page because it's after my Q&A and the Q&A has answers. But all right. So let me explain it in a simple way for you. Red one. Let's say TM is trading at, just round numbers, okay, for your convenience. Let's say it's trading at 2 ringgit for the last few months and the exercise price is $1. And coincidentally, warrants expiring on the VWAP 5 days before 1st June, 5 days before government announces total lockdown, everybody has a heart attack, TM drops 50 cents. Then your cash settlements calculation is actually less. So you're actually getting less than when you have actually sold it with your own choice, rather than wait for the warrant to be suspended. But this is really your own preference. Next question. Emir Rashad. In a high tick sensitivity warrant, are there any differences between an early entry when the mother share is at the lower side of the tick and a later entry when it's at the top? No difference, Emir. In a high tick sensitivity warrant, whether you enter or exit earlier is no difference. The only thing you're looking for is the theta, whether it will erode before the warrant can actually flip. If you buy it right at the bottom, there are ways as well. I'll show you our buy bid promos, which we're having this year. But there's no difference in terms of the live matrix or the pricing until it goes to the next day. Then there's a slight time value or theta decrease.